Your annual dividend income is $22,138. If you divide that by 4, because you're getting paid quarterly, that'd be $5,534 that you are getting paid out on a quarterly basis. So today we're going to be talking about a dividend stock that can be paying out really well long-term and something that I'm constantly buying in my dividend portfolio. So what we're going to do is hop on the computer so we can kind of look at numbers and talk about some of this stuff. Now, if you have been following along for this channel, I actually do a dividend portfolio on M1 Finance. I've been using it for 3 years at this point and absolutely love it. I'll link the platform down below if you want to check them out. Great for long-term dividend investors. That does help support out the channel using that link, but you get some nice deposit bonuses if you use it. So make sure you check out those numbers and try to deposit as much as you can for those bonuses. Now, as we go through this, I'm going to be obviously talking about the stock that we're going to be looking at here today, and I'm going to show you how it's performing in my portfolio and why, even though it's down significantly at this moment, at least as of this recording, I am still buying in long term, and that company is going to be Home Depot. Now, with Home Depot and my all-time, I'm actually down a little bit, even with the dividends that have been paying out, but I want to show you with numbers why this can still be a great opportunity for me and why, again, I'm still buying in during the dip. Now, you can see in my all-time, I'm actually down $78.46. Technically, if you don't include the dividends, which is almost $100 paid out, I would actually be down significantly more, which is why dividends can be a really great way to kind of mitigate some of those losses that you can get from markets going down, and also, too, an opportunity to buy more while they're down to earn more in your dividend yield and actually earn more long-term, and we're going to go over those numbers. Now, as of this recording, it actually dropped under $300, so hopefully, over time, we're going to see this go back up. But because we're investing long-term, it doesn't matter for me if it takes a couple weeks or even a few months for it to get back over, where we are currently, which, as of right now, we own 16.93 shares at an average share price of $309.74. So as of this recording, anytime I'm buying, I'm actually buying under my actual share price, so I'm definitely dollar cost averaging, bringing that number down. Now, keep in mind too that even when the stock is above my average share price, I'm actually still buying in, and I'll show you here as well too. In M1 Finance, I can actually split up all my activities just based off of a certain stock. So you can see here, I've been buying in like $150 here at 304. I've been buying, put $100 at 311 because M1 Finance lets you do fractional shares. You can see here I bought one with $30.17, which was actually a dividend that paid out from Home Depot themselves, which is a really cool thing to be able to do. Now, as time has gone on, I've been owning obviously more shares. You can see the purchases, but Home Depot has actually increased the dividend even as well as I've been owning the shares. So I'm here on seekingalpha.com. I went under the dividend tab, and you can see right over here, current yield is 2.46%, which is pretty solid in my book here. That pays out about $1.90 per quarter or $7.60 a year. Now, their payout ratio is 44.14%, which is pretty solid. Anything under 60% is a really good look when it comes to the ratios. Everything above that, you're starting to eat up a lot of the opportunity for those companies to reinvest in the company themselves or other projects that they're looking at. Now, they've been paying a dividend growth, or they've been increasing their dividend for about 13 years, which is a really good thing to look at because that means they're very consistent in this process of increasing the amount that they're paying every year. And their 5-year growth rate is 18.27%, which is pretty phenomenal when you really consider how, inflation, at least for the most part, is typically 2.5% to maybe 3%. Obviously, as of late, it's a little temporarily higher, hopefully. Hopefully it goes down. But that's a really, really good number there. And so what we want to kind of look at is, okay, if we are investing now, and let's say Home Depot keeps on increasing their dividends at similar rates, maybe a little bit lower if you wanted to be more conservative, what is that going to equal out to? Are we going to actually earn a good amount of money every quarter to be able to live off of? Because that's obviously a big goal of all of ours, is to be able to live off of these dividends. So we're going to bring up the calculator. I'm going to adjust some of the numbers as well too, so you can see some changes in real time, because maybe some will work better for you, while others might be more, feasible for some people, where we're going to start off with a certain amount. But before we do that, I always like to recommend that if you are somebody with student loans, check out my friends at Earnest. They can actually help you lower your student loan interest rates and use that extra money to invest with either buying more shares of certain companies or paying down debt or doing whatever you want with them. It takes about 2 minutes to get your rate. It is a soft pull, so it doesn't actually pull it unless you go through the process. And the best part is you can actually get a nice little bonus for using my link down below, and you help support out the channel so you get more free content just like this. Now, if we go back to Seeking Alpha real quick, I'm going to actually show you. So the last increase that Home Depot recently did was a little below their average of 18%. But right over here, so Home Depot increased their dividend by almost 15%, a little over 15%, which is really good still, right? You consider that if inflation is 7%, 15% is still fantastic. But even if inflation's back at 2.5 to 3%, this is killer. So you can see here, they were paying $1.65 and now they're paying $1.90. So that quarter increase, if you already own shares of the company, which you saw that we already do, we own quite a few in this portfolio here, you know, that quarter increase can mean actual money for you, right? So just as an example, so 16.93709, just a quarter increase, not including what it already is going to be paying out, we're getting an extra $4.23 a quarter for having already ownership of this. And then if we times that by 4, which is in a year, almost $17 extra. Now, that's not a lot of money now, but in 14, 15 years, when we're building up a bigger position, and over that time, we've had those dividends increase, that's going to equal out a lot of money. And so let's go ahead and go into the calculator here and get an idea of what this can mean for us. So I'm over here on tipranks.com. And so what I did is I plugged in Home Depot. And then I plugged in some information. I'm just making sure everything is on screen here for us. So it brought up the actual share price. I'm going to pretend that we're going to be buying 10 shares of this, which is about $3,000. Now, sometimes that can be a little bit more for some people, or, you know, maybe they can do more than, you know, $3,000, but we're going to go with $3,000 as far as a starting baseline. Now, we're going to hold this for, let's say, 15 years. And then the current dividend is about 2.18%, and then we're going to pay out quarterly because that's how Home Depot pays out, and we're going to add in about $200 a month or annually $2,400. Kind of wish they allowed you to do a monthly contribution, but nonetheless, we're going to go here and do expected annual dividend increase. Now, we saw on there that the average has been about a little over 18%, but let's be a little conservative and say that they're just increasing their dividends by 15% a year. And we're going to go a little conservative and say that the price of the actual shares are going to go up about 6% every single year. And then this part down here, it's called a DRIP. And DRIP is essentially reinvesting those dividends. You saw it earlier when I got paid out that $30, I reinvested it back into Home Depot. And so for this example, we're going to take everything Home Depot pays us throughout these next 15 years and reinvest them back into Home Depot exclusively to see the results. Now we're going to click on calculate my return. We're going to see these numbers here for us down here at the bottom. Now, these are obviously just, calculation simulations is what I was trying to think of. These are just simulations, so keep in mind that things can always be different down the road. Things can change. So you can see right over here, our ending balance would be about 145,000. Now, keep in mind, this is just with one stock, so you're not diversified or you're not putting money into other companies as of right now for this example. Total return would be 272%. Annual return would be almost 18%. Your annual dividend income, look at this, is $22,138. So let's break this down. So if you divide that by 4, because you're getting paid quarterly, that'd be $5,534.70 that you are getting paid out on a quarterly basis. Now, obviously, in 15 years, things are going to be more expensive and all that great stuff. But this is just with these numbers going through. And here's a really cool part, too. So the total amount that you've earned in dividend payments is about $73,000. That's $73,000. That's like somebody's full-time salary and or 2 full-time salaries for people working at Home Depot. But you get it in the lifetime of having ownership of the shares. And then your yield on cost would get close to 72%. I don't know if that would be 100% correct. But even if that were the case, that would still be killer to be making that kind of money. Now, again, you can readjust these numbers to make them work for whatever else you need. Like, let's say you can do $5,000 a month or $5,000 a year. How much does that change these numbers? So you can see all the green stuff changed here. So like you're jumping up to $42,000 a year in dividends just from this company for investing in them long term, for having those dividends increasing, and for having the actual share price going up as well too, which would be the ending balance over here. So you look at those things, and we can maybe just calculate here, not including the dividends. Let's see, 5,000 times 15 plus $3,000. So your initial investment, give or take, obviously with not including the dividends, would be about $78,000 that you're investing in, and then you would see almost $200,000 in gains. Now, again, all these numbers are just based off of possibilities. Can this thing change? You can always go onto the website and plug in the numbers yourself. Like I said, with this one, I could just plug in Home Depot and it kind of pre-calculates some of this for us, and then we can go on and check and see how this can impact us in many different variables in our lives as well too. So I'm still going to be buying more Home Depot, even though the stock price has, let me go here so I can show you. Even though the stock price has taken quite a bit of a plunge from its 52-week high of $420. That's very nice. And you can see, for a short time there, it was kind of just stagnant for a while there too. But if they're going to keep on increasing their dividends, 15+% every single year, that can have a huge impact on how much money I'm going to be making. Because you already saw, I got almost 17 shares. And if I can get to 20 to 100 to 200 shares, and then those increases keep happening, I'm going to be seeing some really great dividend gains that I'm going to be able to keep on reinvesting into until I one day want to hold on to them and use them for other means, whether it's, going traveling or using them for other types of investments. It's going to be really cool to see. And, my biggest thing is, if you want to follow that process and if you want to follow along, make sure you hit that subscribe button down below, because you can follow along through that process here on the channel. Hit that like button if you are enjoying these kind of videos so you keep on getting more of them, which I'll also link up right over here, the next video for you to watch, so you can keep on learning and growing. My name is Dennis, and I'll see you in that next video.